Okay, everybody, it's me, Gregory Mannarino. It is a lovely Tuesday, August 10th, 2021. Let's talk you and me. Let's start off with how the market appears to be setting up this morning. Trading doesn't start for about 40 minutes. Okay, stock futures are relatively flat right now, but 10-year yield, 1.31. That's in a nice spot. Crude oil catching a very nice bid here after the sell-off that we've seen over the last few days. Okay, expected to go higher. Again, you know the game with crude oil better than anybody else if you follow this blog, period. The dollar right now is slightly stronger. Okay, we don't like to see that in this crazy environment. I mean, from a market standpoint, we want a weaker dollar. From a normal human being standpoint, of course, we want the dollar stronger so we don't watch our purchasing power evaporate. Henceforth, why we are seeing, skyrocketing inflation. And with that, what you can expect is a very deceitful game being played by the Federal Reserve. Again, none of this is by accident. It's all scripted. You got these Federal Reserve presidents. Yesterday we had Bostic and Barkin explaining that, we have this inflation issue and the Federal Reserve is more than likely going to raise rates sooner than later. Then you got the other creatures on the other side saying just the opposite thing. They don't care about inflation. The truth is, this is the same game that we've seen out of the Federal Reserve for years. But again, if you can just understand what's really going on, how they are achieving their goals here, that is creating inflation, inflating their balance sheet, having governments around the world call upon them for more debt. We got trillions of dollars that's going to be ushered in here in the United States. Where does that cash come from? We don't have it. It comes from the central banks. You're not supposed to know that, though. The Senate's going to vote on this bill, but they can't tell you that it's the Fed that's going to supply the money. They can't do that because if you understood the system, well, maybe you'd have something to say about it. I don't know. Not that it would matter at all because we have no representation here in the United States. All of these puppets in the puppet government, they work for the Fed. I think we all know that. Anyway, so that's the situation here. This game that the Fed is playing, expect to see a lot more of that. But the market's going to digest it. Understand, we haven't had one single round of good economic news in years. It's all been lies. Our economy's booming. It's tremendous. It's fantastic. It's this. It's that. We're in free fall. Debts and deficits hyper exploding. It's just out of control. Debt to GDP ratios. Our economy is actually contracting. If you look at it based against its debt hyper ballooning and its GDP. It's out of control, but you can't know that either. Again, this is all stuff you're not supposed to know. But anyway, let's go back to this freak show stock market. So stock futures are flat right now. 10-year yield looking real good. Crude oil catching a bid here. Okay, no surprise to you. The dollar, all right, a little strength here. So that's a little fly in the ointment. Let's see how this plays out. Once the market realizes, believe me on this, that there is no possible way the Fed is going to be backing off at all for the foreseeable future, you're going to see several things happen. You're seeing the dollar start to reverse hard. You're going to see the 10-year yield stabilize, and that's going to push the stock market much higher as long as crude continues to get bid higher. False flag, some other kind of event that'll keep crude propped up, whatever they got to do, you all know that. Okay, with regard to precious metals, they're catching a bid right now. Nothing dramatic, but you have to understand something. When an asset takes a big hit, takes a precipitous fall, for example, like like cryptos did, a couple months back, it takes a while for them to recover. Cryptocurrencies are again getting bid higher. What happens when you get a big sell-off in a particular asset? The market kind of sits back and digests it for a while. It kind of levels off. There's some volatility there. And then when investors, speculators feel, I don't know, daring enough, they start getting back into it. So with regard to gold and silver here, and especially silver, it's very volatile. But I would expect to see some consolidation here, kind of exactly what happened to cryptos before they started to take off again. So let's look forward to that. And again, people, I'm going to say it. If you're not betting against this debt bubble, it's a hyper bubble like we've never seen, becoming your own central bank, that means holding hard assets, physical gold, physical silver, then you're way, way, way behind the curve. All right. I want you ahead of the curve. I don't even want you on the same level as the curve. I want you way ahead of it. So you need to understand, in my opinion, okay, and you do your own research on this, you need to hoard this stuff. This is how you bet against the debt hyperbubble, and you're betting against what's being set up. This deliberate environment of risk is going to reverse. It is going to reverse at one point. Right now, it's absolutely risk on with the Fed suppressing rates now for over an entire decade, well over a decade, all right? Forcing cash into the stock market, reinflating a stock market bubble on the back of a debt hyper bubble, causing distortions across the spectrum of asset classes. You all know that. But these things present opportunities for us, okay, to belong the market. Like I've explained to you for the longest time, all the calls for crashes and everything. I've walked all of you through this for years and kept you on the right side of it. With regard to precious metals, use every single opportunity to buy more, because the debt is going to continue to hyperinflate. The Fed's balance sheet is going to continue to hyperinflate. And again, this risk on will turn risk off. Period. And when that does, forget about it. We're going to see a reckoning that you are not going to possibly believe. It's going to be epic. So we're getting ourselves in the right spots now for that time, right? We're not looking, look, right now, take advantage of what's going on here with gold, with silver, even with cryptocurrencies. I told all of you when crypto hit that low a month or so ago, I said it was going up. And the rebound off of cryptocurrencies has been nothing less than staggering. If you got in on that low, like most of you who follow this blog did, you're way ahead of the curve yet again. All right, anyway, look, that's the story for this morning. Watch for more creatures to be floated out of the Fed. A whole group saying one thing, another group saying another thing. This is a deliberate act to keep people off balance, to not allow people to understand what's really going on. But look through it. Understand the Fed's goal is to continue to hyperinflate, create inflation. They are in the middle of the largest, or fostering the largest wealth transfer the world has ever seen. And the grand finale of grand finales is going to be the debt market meltdown that's going to destroy the stock market. This is all by design. It's going to happen by design. And all this cash is going to flow into commodities, gold, silver, crude oil, other commodities as well, and more than likely cryptocurrencies as well, which are going to go parabolic. Okay, that's how it's going to play out. This guy here loves you a lot. Please share this video. Get it out there. I'll see all of you later.